We are going to be going over 4 things here in this video. Number 1, what Cathie Wood just said about Tesla and the EV ecosystem and where her new Tesla price target is likely to be. Now, she still has her $2,000 price target, but she pretty strongly indicates it's going higher here soon. Number 2, when AI stocks fall, Tesla stock is probably going to rally quite a bit. I'll let you know when it looks like that could happen. And why there is this relationship with, let's say, Nvidia down, Tesla up, Nvidia up, Tesla down. They are inversing each other for a very specific reason. Number 3, we will go over the final positioning today in Tesla stock from hedge funds and institutions and take a look at the option activity. Last but not least, we will also take a look at your major events happening tomorrow that could move the markets. And finally, for those of you guys that stay towards the end of this video, I will give you a heads up on where I think Tesla stock is going, aka how high, and when do I think Tesla will get there. So let's start this video with about a 5-minute clip from Cathie Wood and what she just said about Tesla stock and the EV ecosystem.
But let's talk about this magnificent run, big tech, innovation, volatility, and maybe if things are getting just a touch bubblicious. With us now live from ARK's Big Ideas Summit 2024 in St. Petersburg, Florida, is ARK Invest CEO and CIO Cathie Wood. Cathie, first time on Last Call. It's great to bump into you, literally bump into you in Arizona last week. Thanks for joining us. Some of your top holdings, thank you, have soared in the last 90 days. Shopify, Coinbase, UiPath, Block, all up more than 30%. Are you worried at all that certain parts of the market are starting to get, or maybe already are, a little bit stretched?
Well, if we're taking a look at the market, if you look at what happened last year, 7% of the index. Wait, let me think about this. I got to think about this, Brian. Most of the returns in the S&P 500 were the Magnificent Seven, or now people are calling them Magnificent Six. Some of those valuations are stretched. But if you think about that, most of the market did not rally last year. I think they were, most of the rest of the market was up only 7%. That's where the 7% number came from. And so we think, and we know from our own stocks, which mostly are not the Magnificent Six, that they have corrected tremendously. They're now starting to show earnings momentum and surprises on the upside, not just from revenue, but also earnings. And we think they have a long way to catch up. We are way below where we were at our peak. Now, maybe we shouldn't have been there, ARKK at 160, but down to 45. We think interest rates clobbered our style.
Yeah.
And we've paid our dues, and now earnings will and revenue growth will speak loudly.
Yeah, all the people there in the background, I think they must understand that, and anybody should understand that you're buying into stocks that can be very volatile. The knives have been out, as you've probably seen, people coming up, Morningstar, et cetera. They've come after you. But I would imagine your message to investors is we are investing in some companies that are going to boom wildly and become 10Xers. And there's other companies that may go away because these are the high-tech AI investments. I would imagine that is got to be a clear message to people watching and the people sitting behind you right there, Cathie.
Absolutely. Absolutely. We're saying that if you get on the right side of change, these companies will deliver super exponential growth. What does that mean? It means not only rapid growth sustained, but an acceleration in growth. For example, Tesla is going through a lull right now related to the cycle. But when autonomous taxi networks, platforms kick in, as we think they will within the next 2 years, I will say, then what we're talking about with Tesla is a reacceleration in growth and a huge increase in margins because robo-taxi platforms are SaaS models, software as a service models. We have a lot of stories like that in our portfolio, and they are highly misunderstood.
Yeah, truly. And a company that feels like some are starting to understand it less lately, Cathie, is, of course, Tesla. It's not performing, and it feels like everybody everywhere is going after Elon Musk all the time. It is your second biggest holding. Are you holding on, and how should investors view Tesla right now?
What you're saying is we'll definitely get a report.
Yes, well, we report our trades every day, and you will see that we have been buying Tesla. There is so much negative psychology in the stock right now around electric vehicles themselves, which we think is misplaced. We think electric vehicles are going to continue to gain share and really take over the market in the next 5 years. EVs, we think, will be the bulk of the market in the next 5 years. So, and then beyond that, robo-taxis are going to change the landscape entirely. So our target price, published target price, which is going to change, is roughly $2,000. The stock is a little below $200. So we're talking about a 10x in our base case, and that's not even our bull case.
So Cathie Wood sounds pretty confident in Tesla's ability to re-accelerate growth. Now, Tesla today is trading a lot cheaper than Tesla has historically, so a lot of analysts are only expecting like 10% growth, and that could be okay as long as Tesla can start communicating with the market. See, the reason why Tesla's down so much is not because the numbers have been bad and Tesla has disappointed. In fact, Tesla has done very well. It continues to do very well in 2024. But when you have a management team that doesn't know their left from right, it doesn't give investors a whole lot of confidence to model out what a valuation should be or could be for Tesla. They don't provide guidance. They say, oh yeah, we're excited for Giga Mexico. No more Giga Mexico until rates fall. We've been waiting on the Cybertruck since 2019, and Elon said Tesla shot themselves in the foot with the Cybertruck. A lot of us also believe Dojo could be an important part of Tesla's business down the line, and Elon said that was basically a Hail Mary, that we really shouldn't expect Dojo to work out. Even if Tesla thought this way about their product lineup, like a Dojo, why would you say that in that context to the markets? That doesn't make a whole lot of sense. I even made this post on X. I said, the more you listen to conference calls this earnings, the more it looks like Tesla and Elon Musk tagged both of them don't give a crap about the stock. I mean, even a company like Enphase with 60% declines year over year in revenue still gave a Q1 guidance, and they said the business could get worse from here, at least in Q1. They think the bottom is in Q1. And what happened? The stock was up almost 20% the next day because Enphase gave the market something that they can work with, that maybe Q1 would be worse than the quarter they just reported, but maybe it is the bottom. I go on to say, if you invest in Tesla like I do, just realize the management team at Tesla either, one, does not care about the stock/investors, number two, doesn't know what Wall Street wants, or both. Probably both in this scenario. Tesla should not be the worst performing stock in the S&P 500. No excuse for that looking at the numbers. It's management's fault. So long story short, here, I mean, in the next 12 months, does Tesla stock do well or does it not? I think it really comes down to the management team. Do they start actually communicating with investors, or do we keep getting the runaround and splashed with bad news every chance well, the Tesla team can give it to us? If Tesla's management team turns their act around, Tesla could be at all-time highs by the end of this year, as long as they don't cut prices and nothing dramatic happens in the marketplace and people don't just stop buying Teslas. But from what we can see, that looks unlikely. January was just a record in Europe. China wholesale numbers, pretty much a record or pretty close to a record. Demand looks okay. Ford, GM, Toyota, they all guided up for 2024. We're actually in a pretty good spot fundamentally. That is why I am quite constructive on Tesla stock here, even in the near term. I think people have gotten way too bearish on the stock, and I think the time is now for an upside move, at least in the next couple of weeks, and we'll go over that later in this video. Tesla option activity today from hedge funds and institutions was actually on the strong side. You had 607 orders, totaling $450 million, with a positive order value of 59%. Anything above 50 is good. 59%, that's pretty good. Yesterday's number was 63%, so the past 2 days really have been strong for Tesla. If we take a look at the volume today, 55.32% of it was to the call side and 44.68% of it was to the put side. And as I mentioned in the last video, you actually have the sentiment pretty good for Tesla stock today, sitting at about 90, which yesterday's sentiment was at 54. That was categorized as neutral. Now, coming tomorrow, we're really not going to have anything that is too impactful as far as economic data here on the calendar, but we will have Fed Logan that speaks at 1:30 p.m. But actually, we're going to get some revised data coming out tomorrow morning for some of the jobs report numbers that we just got. So some further estimates are going to be released, and we will get a new calculation. So whether or not it looks like we added, potentially more jobs or less jobs, that will also move things around, but it is not on the economic calendar. So a lot of people actually don't know this, but if stocks are moving aggressively tomorrow morning, that is why. We do have some data coming out from Canada. 8:30 in the morning, you're going to get the Canadian unemployment rate, expecting that at 5.9%, and participation ratio 65.3%, average hourly wages up 5.5%, full-time employment change about 30,000. That was compared to a loss last month. So anything that is, super high, super low here can move our markets just because of the similarities in our economies, the proximity in which Canada is to the US. I mean, I live here in Michigan. I mean, it's like 50 miles and you could be in Canada, right? It's pretty dang close geologically speaking. So yeah, we do want to watch that, but nothing too important. Coming out at 2 o'clock in the morning tonight, you are going to get some data out of Europe as well. Italy, you're going to have industrial production. For Germany, you are going to have the inflation rate and some data out of India, but I'm really not expecting that to move the markets at all. Dan Ives writes on X, "We believe the uncertainty around Musk at Tesla and overall AI initiatives has been a 40 to 50% per share overhang on the stock that must be addressed by the board. We'll discuss on Last Call CNBC tonight. The board of Tesla needs to do the following three things in our view. Number one, create a new comp package that supersedes this 2018 one. Number two, devise a new comp package that would get Musk directly to 25% voting share boogie. Number three, we believe Tesla moving to Texas would clear the way for the board to get this done." U.S. Treasury Secretary Janet Yellen said today it's obvious that there is going to be banking stress and losses associated with commercial real estate. Morgan Stanley says, on closer inspection of unfriendly seasonal factors, we are making a significant revision to our forecast for control retail sales in January from positive 0.5% to negative 0.5% month over month. This lowers our real PCE tracking for Q1 2024 from 2.7 to 2.2% quarter over quarter annualized growth. If Morgan Stanley is correct, that would be great news. And auto loans in serious delinquency picked up in Q4 2023 to the highest in more than a decade, as per the New York Fed's own data. I mean, you're getting up there to hopefully not what is the great financial crisis levels, but you're definitely starting to creep up there. The S&P 500 sits at a new all-time high, yet the Russell 2000 is down about 20%. This typically sets the Russell up for a large outperformance coming over the next, year or two, but I think it's too early to say if that's going to happen this time around, but that would seem logical. As rates go lower, as the economy continues to hold up, inflation falls, small cap stocks, be it they're dramatically undervalued compared to Magnificent Seven names, that could be an interesting place for money to move into in our markets. Keep in mind, when I refer to small cap stocks, I'm really referring to interest rate sensitive names, so that also incorporates Tesla. If the Russell 2000 outperforms, Tesla stock's going to outperform. We've seen this more over the past couple of weeks, but Tesla is actually trading alongside the Russell. If the Russell is doing good, Tesla is doing good, no matter what the S&P is doing. The S&P was red for vast majority of the day today. What happened? Tesla was green. all day. That was because the Russell 2000 was actually up about 1%. Dan Ives says, in reference to the video we showed at the beginning of this video with Cathie Wood, that he could not agree more with Cathie on Tesla, and he says this is the interview to listen to. Fundstrat's head of technical strategy, Mark Newton, said today, quote, while markets might seem flat today, tech is actually showing some stellar outperformance along with equal weighted discretionary. SPX 5000 has no real significance outside of psychological reasons and likely should be surpassed next week. U.S. Treasury Secretary Janet Yellen also said today, in an extreme case, it is possible to see issues with selling debt. If that were to actually happen, we would have a catastrophe on our hands. If the world started rejecting U.S. treasuries, that's what she means by selling debt, essentially selling treasuries, that could make yields go much higher from here. So hopefully she's not hinting at a problem out there. But it does really make you scratch your head to why she answered that question like that. Here you can see this photo that was shared by Zero Hedge on X. This is the NASDAQ versus the NASDAQ breadth, and you can see the NASDAQ here in blue just continuously going higher, whereas the NASDAQ's breadth has been declining ever since the start of 2022. Technically, it's been declining since about the midpoint of 2021. To mid and small caps could be coming. And that would be the logical conclusion here. At some point, these charts will have to converge. Now, how does that happen? Either the NASDAQ stays high and the rest of the NASDAQ, the breadth of the NASDAQ, starts to curl upwards, or the NASDAQ comes down to reflect the NASDAQ's overall breadth. I think that really depends on when your big tech names, your AI stocks, fall out of favor. Now, right now, we're in a very interesting situation because take a look at NVIDIA today. NVIDIA was down 0.65%. I'm going to use NVIDIA as the bellwether, but I mean, pick out a semiconductor name and you can use that as well. If you take a look today, NVIDIA was down. Tesla was higher. Russell 2000 was up by about 1% as well. On February 6th, Tesla stock hit a low of $177. Tesla stock was in the red quite a bit. It ended up closing higher about 2.2%. This was the same day NVIDIA lost about 4% at one point in the day. Now, why this correlation is happening, why Tesla stock does poorly when NVIDIA stock does well, and when NVIDIA stock is doing poorly, Tesla stock is doing well, is because of how funds have to allocate their portfolios. No matter who you are, if you are remotely in the markets, you know about the AI craze that is going on right now. If you are a hedge fund or institution, you almost have to chase NVIDIA and SMCI and ARM and all of these other companies because you don't want to have your clients go to other funds that will do just that and chase these AI names. So they're just chasing and chasing and chasing and chasing. We don't have money coming into our markets right now. There has been a dry spell as far as bringing new capital into our markets for a long time now. There is $6.2 trillion right now sitting in money market funds. That is about 3 times the entire ETF of the Russell 2000. Add all those companies together, do that about 3 times, and that's the amount of money that is sitting in money market funds. That includes an SMCI, for those of you guys that have followed that stock in its parabolic rally over the past 18 months or so. That stock's the #1 holding of the Russell 2000. Times that by 3, and then times every other stock in the Russell 2000 by 3, and that's the amount of money sitting in bond markets right now, in money market funds. When the Fed does start to cut rates, that's going to be great for pulling new capital into our markets. But right now, there is no new capital significantly heading into stocks. You're not getting billions and billions of dollars rushing from the sidelines in cash into stocks, not when treasury yields are this high. So what's been happening is money has been getting sucked, kind of like a sponge that's all wet, and you slowly start to squeeze and all the water starts to come out, right? That's what is happening to the rest of the markets. That money is getting pulled from the rest of the markets and put into big tech stocks. It's getting put into Microsoft, into Apple, into Nvidia, into Google, into Amazon, AMD, SMCI, all of these chip names. Other areas of the markets, the only area that I can think of that's done remotely decent is certain areas of healthcare. That's it. So that's why Tesla stock is doing better on days where AI stocks are doing worse. Because if you're a hedge fund or institution, you got to be allocated to these stocks. Now, Nvidia, it's went up a lot in value. So it's becoming a larger percentage of the S&P 500. So if you're a fund that has to track the S&P at the bare minimum, you have to buy more Nvidia the higher it goes up. And then the higher it goes up, you got to buy more Nvidia. It's this self-fulfilling cycle. Now, as to when Tesla stock may actually start to do well and start to see a lot of inflows here, it's after Nvidia's earnings. Let's be honest. Nvidia will report earnings. I believe it's on February 21st. I believe it's next 2 Wednesdays from now. So not next week, but the week after that. Nvidia tends to do this. They either tend to gap up on earnings like they did 3 earnings ago, and then sell off for about a week or two, and then continue higher. Now, back here 3 earnings ago, when Nvidia basically shocked everyone, Nvidia sold off from the peak of earnings to the low about a week later, about 11%. The next earnings, 2 earnings ago, when Nvidia has continued to impress investors, Nvidia sold off about 17% over the course of the next month following Nvidia's earnings. And then the last earnings, Nvidia ended up selling off about 11% after. So if you actually look at the average loss, you're sitting at like 13-14%, the average pull down after Nvidia's earnings. Now, Nvidia's went straight up. So could this time be 20%? Could it be maybe a little bit less? Sure. But when Nvidia comes down, Tesla stock will start to get more inflows and Tesla stock will start to perform better. That's why on days where Nvidia is down, funds can take that money and put it into other areas of the markets. Let's be honest. If you're looking for growth, if you're looking at a company that should be more profitable this year than last year, especially now considering Tesla's looking at laying people off, they have not cut prices yet. It looks like the business itself is doing good. I don't know of a better area to put your money than Tesla. I mean, even when you look at the charts on Tesla, it looks pretty dang good. But long story short, that's when I think Tesla stock will start to do considerably better. When the air comes out of the AI bubble at least a little bit. Is Nvidia going to fall back to $200 per share? Absolutely not. $300? Absolutely not. $400? Probably not. $500? That looks likely to me. If that happens, then boom, you're golden. The rest of the markets can probably broaden out quite a bit. Specifically with Tesla, things look pretty good. As I said in the last video, the MACD just went positive today. The RSI just went positive on February 6th. Ever since February 6th, where you were up 2.23%, you followed that up with the day after a 1.34% gain, and today a 1.06% gain. It looks pretty dang good right now. At the same time, the S&P 500 really hasn't done much. So Tesla's really been outperforming the last 3 days, but when you get to post Nvidia earnings, when Nvidia does go through its cyclical sell-off, sure, could it rally somehow again? It could, but that would put Nvidia close to the most valuable company in the world if it went up like 20, 25, 30%. Doesn't seem likely right now. I think there needs to be a hard reset for AI names. Again, that's when Tesla stock will likely do very well. Now, based on other factors I'm looking at, the last gap you had was obviously a gap down from Tesla earnings that came out on January 24th. It looks like you can at least get back to there. That would be about 210. But if you do see layoff news that is taken favorably by the markets, if you do see maybe an Elon Musk or a Tesla board that looks serious about being transparent with investors, saying the right things to investors, not trying to scare investors anymore. I don't know exactly what that'll be. Maybe Tesla comes out and they say, hey, business looks pretty good. We can issue guidance now. Probably not likely, but anything along those lines, anything remotely showing that they care about the stock or care about investors, I think would be really, really good news right now. And again, the sentiment is just crazy bearish right now in Tesla. But nonetheless, I think Tesla could hit 220 or maybe even 230 over the next couple of weeks. Call it the next month or two, just because NVIDIA earnings are still 2 weeks away. But I mean, even from a trading perspective, when the RSI goes positive, when the MACD has been so negative for so long, ever since December 29th, you went negative on the MACD. I mean, normally this is the time where you want to take on a bullish trade. Considering you have a gap here, you probably fill that gap. That leads you at least back to about 210. Do we go higher or not from there? Again, that's down to people's personal opinions. Let me know down below in the comment section if the Tesla team does show they are serious about turning things around, communicating with investors, no matter if it's good or bad, and doing what they should be doing. Let's be honest. Tesla stock is the worst performing stock in the S&P 500, not because they've cut prices in 2024, not because their numbers are bad, quite the opposite. It's the worst performing stock because they have no PR team. Elon doesn't know how to communicate to investors. Nobody else is man enough to communicate to investors. We're stuck in a loop. That's the honest truth. But I do think inevitably we get past these issues. And again, for the long term, Tesla looks bright. I do think by the end of this year, if Tesla does the right things, focuses on profitability, gives the markets something to look forward to, even if it's the $25,000 vehicle coming out in 2025, if they can clarify, say, hey, it's going to be 4 doors, it's going to be a little bit shorter than the Model Y or whatever, just give us something to go off of. Elon and the team don't have answers for anything. They can't give us specifics on the next generation vehicle. They can't give us any kind of insight to probabilities of success with Dojo. Is it 2%? Is it 50%? Is it 60%? What are the odds that is successful? Optimus. Who knows where that's going? FSD, where are we at in terms of robotaxi? How long do they think that's going to be? I don't care if Elon says 5 years. That's better than saying nothing. Hopefully you guys get what I'm spieling about. We just need clarity. You got to get rid of some of the uncertainties, and I think Tesla stock has a very strong 2024. Hey, in the near term, regardless of that, I think Tesla stock is going higher. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us, check out that link down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.